Hello everybody, happy trading. It's Friday, the week is almost over, and I want to talk to you about an amazing stock that's really under the radar, and this video is going to get me like 20 views. I know it for a fact, but I'm still going to make it because I truly believe in this company. This is a stock that I hold dear to my heart because this is a company that I use every day of my life. The company is called HIMS. HIMS sells men and women's products, upkeep products, but these are special products like erectile dysfunction, hair loss, skincare, and for women, they sell a bunch of women type things equivalent. And I use it for my hair. I was literally losing all my hair. I had patches everywhere, and a lot of it grew back. Not all of it, but a lot of it. And this is one of the products that I use every single day, so I understand how good the product is, and I understand how sticky it is. I also understand the stigma of men talking about this and consequently women talking about this in public. So it's hard to find somebody to talk about these things, right? They're kind of embarrassing. I'm losing my hair. My penis doesn't work. I have acne, right? Whatever. So in today's video, I was reading an article about Seeking Alpha and I wanted to read it live. I read like one sentence and I'm like, yo, I got to share this video. I got to share this with my audience, right? So I got to make a video and share this with my audience. So give me a minute. And this stock I really do like. I don't know if it's going to make money in the future. I think it is. I think it's going to make a lot of money. And I think that this is 100% under the radar and absolutely smokes Teladoc as a telehealth play. The article reads, HIMS and HERS, just what the doctor ordered. Love it already. HIMS and HERS have now reported back-to-back quarters with over 100,000 net new subscriptions. So they have a total of like 820,000 or so. And the last quarter and the quarter before that, they added 100,000 per quarter. This is massive growth. I mean, think about it, 100,000. On top of that, and I don't know if the article is going to give you this, they have a 90% retention rate, which means if you use their products, 90% chance, 9 out of 10 people will keep buying their products. And a lot of their products sell on a subscription basis. For example, I have shampoo, I have conditioner, I think it's called like monoxide, biotin. I have all these things plus more products that I order every single month. And I'm glad to do it as long as it keeps my hair on top of my head. My brain doesn't have to explode. The telehealth platform expects to approach a 540 million annual sales run rate in Q4. The stock is cheap at only 2 times 23 sales once the company becomes profitable. The recent price action on HIMS and HERS highlights why a downturn in a sector can be just what a company needs. The healthcare sector overheated during COVID, and the weakness in the sector stocks has likely driven away the competition. 100%, I agree with this. All of these pump and dumps, and now the real winners are going to be here. 2023, they're expecting profitability. Right now, they're not profitable, but they're getting so much closer. When that happens, up. My investment thesis is much more bullish on the stock now with the business booming and the stock still trading at only $6. Besides for Tesla, HIMS is the only other stock that's up for me right now, right? That's almost doing good in a bear market or decent in a bear market. These are two great charts. On the left-hand side, it's subscriptions, and on the right-hand side, it's quarterly revenue. Subscriptions are up 80%, 80 freaking percent. And quarterly revenue up 87%. Guys, that's amazing. And I think that their margins is like 76% or something like that. Q2, the online prescription platform added 107,000 new subscriptions, driving the total to 817,000 subscriptions. And it now derives $114 million in quarterly revenue, mainly from these subscriptions. Just for you guys to understand, the market cap is around like 1.2, 1.3 billion off the top of my head. And the market cap of Teladoc is like 5 point something billion. Teladoc grew like 17%, while HIMS is growing over 80 freaking percent. It's simple, man. Better bang for your buck, better risk versus reward, and better business platform. Telehealth is more like consultations and subscription based, while HIMS does the same thing, plus it actually sells products. So all of that is to drive you to buy their products. And right now, they're only in the USA and the UK. They have a global expansion that they could do in the future. The guidance suggests the story is only improving for HIMS and HERS launches new modules and products. The company guided for Q3 2022 revenue of 129 to 132 million, with the yearly guidance predicting another sequential increase in Q4 to reach 470 to 485 million sales target for 2022. Solving the last problem. So this is the last issue. Analysts currently have Q4 2022 revenue targets at 135 million, or what amounts to an annualized run rate of 540 million. The company forecasts being adjusted EBITDA profitable within the next year and growing quarterly revenues by 21 million in the second half of the year, with nearly 80% gross margins. Guys, 80% gross margins, over 80% subscription-based growth, over 80% revenue growth, over 90% subscription stickiness. And I'm telling you personally, I use the mother effing products. I'm not paid. This is not a sponsorship. Management points to some solid margin improvements, but a company's growing revenues at this clip should easily obtain much more leverage than the 110 basis points improvement. The stock is stuck at just $6 for this reason. HIMS and HERS has a market cap of only 1.2 billion, but the company has tons of dilution ahead with an expected stock rally. The diluted share count could easily surge from the 204 million level to closer to 230 million. Stock-based compensation dilution. I love it. The company has 14.5 million outstanding stock options with only 8.2 million exercisable now. In addition, HIMS and HERS has 9.1 million outstanding RSUs for a combined dilution of 23.6 million shares if the stock rallies from here. Good. Key takeaway. The key invested takeaway is that HIMS and HERS is far more appealing, trading at only 2 times 23 revenues. The company faces less competition in a space, allowing for further brand building. The biggest catch is the lack of profitable growth, and any signs of leverage in the system and reduced spending on marketing will send the stock much higher to match the growth rate. Guys, this is HIMS. It's trading at $5.80. It's literally trading at like 60% of 52-week, right? 52-week low, $2.72, 52-week high, $9.19. This stock for me is an absolute monster because, again, I think it's super undervalued. It's going to be profitable next year. If it can grow at these numbers during a downtrend, think about it. They can make a lot of money. Most of their things are not insured, right? Covered by insurance. Most people just pay cash for their products. A lot of people don't have money to go to doctors. A lot of people don't have insurance. A lot of people don't want to pay for co-pays. Yo, the products that they're selling at some time is cheaper than what people would be paying with insurance. They don't charge a lot. Once they get that subscription base, they can start increasing the revenue, increasing the prices of what they sell. For me, this is a home run freaking play. And I wish that this thing takes off because honestly, I'm the only one talking about it. And if it were to take off, I would be so happy because I personally use the product. So I am obviously emotionally invested into this company. Guys, thank you so much. Give me the likes, give me the shares, give me the subscribe. And in a year from now, don't tell me that the Berg did not tell you about this company. I'm not telling you to buy. I'm not telling you to sell. I'm not a financial advisor, purely entertainment and education. And I don't like all these crazy moonshots. However, this is a better company than Teladoc. A lot of people shit on Teladoc and don't like it, but this is better than Teladoc if you are in the telehealth space. That's all I could say. This is the #1 telehealth space play for me. Because besides for the telehealth, they actually sell a freaking product. 80% growth, 80% stickiness, 80% everything growth plus, and nearly 80% margins. Have a good day. Have a great weekend. And if you want to see more about this company, click on this video right here. I go into it a little bit more in depth and I go over their earnings call. Thank you so much again. Have a great weekend.